Welcome back to Trade and Wait, aka Trader Sage. Trade and Wait, W-A-I-T. Had to make sure I spelled that right. W-A-I-T. Trade and Wait. That's a reminder that fundamentally trading is centralized around your ability to wait for your setup, to your ability to wait. Right? All right, so this is the trade we took last night. This was the target. It didn't hit the target. Died out, fizzled out. This was a clear entry for long. I actually was watching this. I'm not sure. Was I recording it this time? I'm not sure. Anyway, I kind of seen this here. Saw this. And this is a breaker. So you got the low, high, lower, low. This is why you can count this as an order block as well. Looked like it traded below mean reversion, mean threshold rather, and came back up here. So you got a breaker, you got an order block. There's no fair value gap here, but that's fine, right? If you didn't take any of this, that's fine. You could have gotten here, inverted bullet, bearish fair value gap here. And why am I still like, these are high time frame PD rates is still based off of a high time frame model, 4 hours. So it's not like I'm just jumping into the 5-minute and just running with the bag, right? So right, got a bearish fair value gap here, got it violated here, holding above the consequent encroachment or the midpoint of that violated bearish fair value gap, and this is a reason to continue to hold. Right, run up. You got a pull back here, didn't trade back down into here. You got this volume imbalance here. You can use that. Use the volume imbalance there. You want to use this order block, you can. That's fine too. See, right? Pretty accurate there. You want to use it's a tiny little fair value gap here. I wouldn't waste my time with that one, but here's the target. Here is 1 o'clock. Pull back. So you got to run on stops, right? Order pairing. Got order pairing here. Market structure shift again. Pull back into this imbalance here. And high, low, high, lower, low. This is a breaker. Probably more clearly a breaker on the lower time frame. So. Right. So low, high, lower, low. These two is the breaker. Okay. Anyway, go back 5-minute chart. Trying to do this reviewing this for myself, actually. For myself primarily. So all right, so 2 standard deviations from the initial optimal trade entry that we discussed. So 2 standard deviations was sufficient, and this was the ultimate target, which it did not touch, which see, so it was like $1.25. Is that right? $1.75 off, something like that. I don't know. Doesn't matter. So you had this entry. You missed this entry. This turtle soup. You can enter on the retest of this, because this is a key level to me, right? Because this is the level that price ran stops on, right? Doesn't matter way back there stops. It does matter, but this matters too, right? This is where the stops are ran. Relative equal lows. stops ran. This is a key level, like because false breakout, reclaim. So this is the entry. Order block is high probability order block because it ran stop. So that too, right? And we use, right, that would be that, right? High probability order block there. Key level retests, took off. Let's take this off now. We had this level here. Price consolidated beneath it. You call that absorption, right? So price is consolidating here, which probably gives you some ideals, right? You go, all right, this is real resistance here. Real resistance, price may want to go down. Okay, right? And then you see this big bull bar. Pull back, retest. So also support and resistance in general is not like it's this one level. It's usually like a zone or area. And you can determine that for yourself, right? I am interested. I'm not gonna make this a big deal here, but dragging this out actually still makes sense in terms of how price interacted with it, right? I think that's pretty chill, pretty neat. You could just say it's a swing high here, but I still would, yeah, I'm not gonna make a deal out of that, but it's interesting. And what we got here, so this is a 4-hour bullish fair value gap. Violated here, reclaimed here, and you can just visually see that, right? The bodies tell the story, the wicks do the damage. Bodies tell the story, the wicks do the damage. That was, these red lines are previous weeks, either previous week's low or previous week. It's like this is the previous week swing low, previous week's low, previous week swing low. Right. Just in terms of discount to premium, we can see that price is overextended. We did have the ATR channels on last night, and right, price was close to 5 ATRs. The it 4 ATRs like. All right, so close to 4 ATRs. I'm gonna leave it at 5. That's right. So we determined like, hey, even if you looked on this 4-hour time frame and you look to see how many times price retrace down to or pull back to the 5 ATR channel, not a lot of them. Here's one, and then we have this nice reaction, right? So push higher, pull back, rent, sell side, push higher. And almost never is it going to 5 ATRs on the positive side to the upside. So negative 5 ATRs, we could expect some type of mean reversion setup. In this case, it traded to the positive 1 ATR and then pull back. So that's good money. That's good money in and of itself. This is good reason why this 5-minute setup works. Over here, you gotta let her know not to come down here. I only want you like 4 hours and better. All right, so right, we got this bearish fair value gap. ICT says that once you learn this, meaning his system, learn how to read price action is king, then that's when your indicators will start working. So why do I bring that up? Obviously, you can clearly see that this, if you in the right hands and at the right time, and I told you yesterday that I kind of use this for back testing purposes, or post-mortem analysis, right? Good. Pre-market analysis, post-mortem analysis. It's just not on the chart like during the trading, because all right, I understand this is overextended. I'm looking at this discount to premium. This is one of the ranges. This low to this high, 50% price. What's a PD array above 50%? You can say this here, or I would say this bearish fair value gap. So it works out either way, like no overthinking, right? Right, no overthinking is there. All right, so what? So that's the one. That green one is that bearish fair value gap isn't there right now. But we can draw it, right? So why not? The price. So that's like, it was there. We also have the gap, and the week opening gap here. You see price traded into that there, and it opened, and then it's nice smooth candle. Like it's no wick there. Let's see. We're looking at the open and we're looking at the low. I think 0.25. 0.25. Little one tick difference. Visually, it's a smooth bottom. Nice smooth bottom. Let's see. Let's take the noise off. I think the point is made there, and this should be red. And this is blue. Liquidity void. Inverted bearish fair value gap. And we good, right? We good. Take this back off. I want to I'm actually looking for smooth smooth bottom of smooth high candles, right? Smooth, no hezzy. This ran right up. You got a smooth bottom here, smooth bottom here, retracement. Just like a little exercise here. About to call that a night. Move on. It's market opens up in 9 minutes. All right, so 4 hour to the 15-minute. That's the instructions. So yeah, look at that. Look at that. So we got a swing high. Got a bearish fair value gap here, adjusted. Now price is trading above the CE, consequent encroachment of this 4 hour bearish fair value gap. So you want to see what price does. This price does you want to hold above, or are you going to fall back below, rebalance this? But we will see. We will see. All right, so that's set up. There's a tiny little fair value gap here. 15 minute. 15 more minutes, 15 minutes. Tiny fair value gap. Tiny fair value gap there. Open, pull down. Good to go. Pull back into here. Or you can use a wick. You don't use order blocks. Or propulsion blocks, actually. Propulsion block here. Boom, pushed up and a high, pull back into another fair value gap. So this is why. All right, so you had a high time frame. I'm not going to change the color because this. Let's just do the right thing, right? How you do the small things is how you do everything, right? How you do the small things is how you do everything. Make that black all the time. All right, so pull back. So, all right, so we said, so the draw on liquidity doesn't mean that it has to always hit the draw on liquidity. This draw on liquidity doesn't mean this gonna stab through it, right? Like I shot at him, but I ain't hit him. Like if I would have hit him, you won't be seeing him right now. But that's that, right? Like yeah, it's not a tombstone, but yeah, he got grazed almost, right? So with that is boom, right? 4 hour or high time frame. We already determined this was overextended, so we're looking for a mean reversion setup. This was nice though, but and we already discussed that on a 4 hour chart. So we're looking for 4 hour levels as the potential draw. Because this is, you can use the daily, you can use something else, 8 hour, daily, 12 hour, whatever you're using, 3 hour, whatever. But for me, 4 hour, this was a draw at this time. This was a draw. Previous week's low. This swinging, the gap was a draw. All these draws, you got to think about low hanging fruit. So low hanging fruit. First objective was here. Found support. 4 hour bullish fair value gap here. This showed the willingness to go higher. Retrace. Technically a market structure shift happened like here below this low. Retrace, didn't get back above this order block. Right, kind of stabbed through it, didn't eat the wick. Drop, ran stops back into discount. Tiny little fair value gap here, inverted fair value gap. And probably like, why are you playing around in the 15 minute? Because this is what it calls for, right? 4 hour for me, the 4 hour goes with the 15, 15, 5, 1, 15, 5, 1. So boom, right? And this pull back into the air, pushed up, ran all of that, and started eating away this gap here. So this is the weekly open. You can use that. That's low hanging fruit. Asia range high, or the new day opening gap, food, new week opening gap, food, right? Traded into that, rebalance that, pull back. And you got this level here. So you have a what you call this? This is a balanced price range. So you have gaps here. You say, oh, how come I want price to pull back into these gaps? That's doable. But we also have redelivered, rebalance. What is it? RDRB, redelivery rebalance, PDRA. This is a balanced price range. This is the breakaway gap. A breakaway gap in like in the 1 minute or probably the 4 hour. Who knows? Let me see. Let's see. Yeah, there's a gap here. Never, like, it didn't trade back down into it, but whatever. What else? What else we got? We got 3 minutes. 3 more minutes. 3 more minutes. All right, so pull back into this balanced price range. Just change the color to something. All right. And then you have this. Once that happens, you have this violated bullish, bearish fair value gap. Oh man. 67, 21, 25. And the low on this candle is 67, 21, 25. So literally traded back into this inverted fair value gap high, and then big bull bar right at the 315 candle. Yeah. So we had all of that. And all of that to support prices going higher, taking out at least this swing low, but this 4-hour fair value gap. This 4-hour bearish fair value gap. So we had two targets, 4-hour targets, 4-hour, 12-3, draw on liquidity, draw on liquidity, draw on liquidity. And I don't know, was this useful? I ain't even, we discussed the Asia range trade yesterday, kind of discussed the bottom. This entry was nice though. This is all before midnight. Missed that there was opportunities here. 3 o'clock. Continuation at 10 o'clock. Right before, exit at 12:45. This is 145, run on the lows here. Let's see, we can see so this would be, for me, it would be a 1 minute entry here. Is it 15-minute go with the one with me? But if I can see it on the 5 minute, I trust me, I'm not going lower. I will stay there. But all right, so there's your run on stops here. And we want to see completion of a market maker model. Get rid of that. Run on stops. Boom. Got a time imbalance here. No fair value gaps here. So you would have to use something else. You got this back here, reclaimed. You want to go back there. You go here, use this. Time imbalances, they are magnets for liquidity, magnets for price to draw to, but they are the weakest in terms of support and resistance. So 6703.50, we're looking at the low in this candle, 6703.50. So definitely supported here. Run up, run on buy side, pull back into the order block. There's still no fair value gaps here. Push up, and here's one here for these entries. So you didn't feel comfortable taking those, you just wait, right? So we have that, push up, got another one here, push up. And you can look across actually. So this is actually a balanced price range right here. And it's this bearish fair value gap overlapping with this bullish fair value gap. So look, and that's that. All right, and then we have this technically run on stops, market structure shift here, pull back, and it just, what is this? I don't remember what this is. 15-minute level. Okay, 15-minute level, and then just got a nice push, right? So, and based on the market maker buy model, then this would be the target, first target. But you got a huge momentum run into the 4-hour level, so loss. Now the market's open. What you doing? What you doing? What are you doing? All right, so 4 hours, just a 5-minute, 15. Really, you want to wait for a run on stops before you can. You got a smooth bottom, no, smooth top, though. I ain't saying nothing. You guys do what y'all gotta do. I'm out of here. I'm out of here, man. You guys stay safe. Capital preservation is rule number 1. Growing your account is rule number 2. Rule number 3 is growing it exponentially, right? That's the rule. Check that out in New Trading for a Living, now by Alexander Elder. He brings that there. All right, peace. Please like, comment, subscribe. Tune in. Peace.